Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's talk about some altcoins. Last week we talked about some of the bargainy type low market cap plays. This week things feel a little bit overextended. Targets have been hit on a lot of these charts. I'll go through this. I took profit on a few things. ADA, ETC, Fetch. I think the AI stuff looks a little tired. This is NVIDIA. If you're heavy into the AI coins or an AI narrative, it makes sense to track NVIDIA and have an opinion there, SMCI, chips, etc. I'm getting a lot of questions about Williams Fractal, so I'll just go through it real quick once more. To pull up the indicator, just type in WF, and it'll be the first thing there. I have switched to these colors, so I make the top fractal a resistance fractal red, a support fractal green. If you are in a long, let's say you're long from 500 on NVIDIA, the trailing stop loss starts to appear eventually when you get a low. Okay, a lower low really is what this is. So what the fractals prevent is telling you, hey, you just made another lower low after making a lower low. So that is when the trailing stop loss triggers. They're not always perfect. This is a great example, right? NVIDIA just kept going. It didn't matter. But the main question I'm getting is, where do I put the stop loss? Do I put it on the fractal? Do I put it on the wick? Do I put it on the candle body? Do I put it a percentage down below some point here? So the way I do it, there's no correct way, but the way I do it is if we get a candle close below the wick of the fractaled candle, okay? So the current trailing stop loss would be 840, we'll call it 840, okay? That's based on the wick of the current lower low candle that recently happened. Now this is hard to do on an order book because as this candle is forming throughout the day, potentially anytime in the next 2 weeks, who knows, the candle may wick deep and then pull back up to like 844 and then all of a sudden it didn't trigger the stop loss, right? So it's hard to do this unless you're monitoring what's going on. I tend to use these for large sized positions, for leveraged positions. If I'm asleep, if I'm AFK, if I'm away from the computer, whatever, for whatever reason, and it's a sensitive area in price, I will just put it on the order book. And if it gets hit, it gets hit, okay? Sometimes that happens. But typically if you're drilling deep past a previous lower low, the odds are generally pretty good that that's a good time to trigger a trailing stop loss anyway. So I hope that helps clear up the main questions I was getting. The other part of this, the resistance fractals, especially now when a lot of these markets, legacy, crypto, alts, are kind of just 45-degree angles, right? Like what do you do? What do you do? There's no pullback. That's again the beauty of these fractals. Let's say, for example, you got stopped out here, okay? This is another thing that's hard to do unless you have access to a stop limit. I believe it would be a buy stop limit is the order type, which would allow you to buy this breakout trade when price breaks above the resistance candle. And this would be, again, a judgment call. Ideally, you want it breaking on the close, okay? But that's hard to do. So there's a little bit of a subjective element here, certainly, especially on the high time frames. When you break this high, which was an all-time high, do you immediately open the long? Do you wait for the daily close? That's a judgment call, okay? But that's part of the system. It's telling you, ultimately, if you're making a higher high, there's momentum. If you're making a lower low and you're long, that's telling you to trigger a trailing stop loss. All right, let's talk about some alt stuff. So we've got Jungle Beat here, monitoring crypto apps in the App Store, monitoring Google Trends for a specific phrase by crypto. None of this is too alarming. I mean, nothing here looks like it's all over for some intra-trend play on a USD chart, okay? My big issue is two things are potentially going to happen soon. Either Bitcoin dominance is going to break out in a big way. Bitcoin USD is going to break up in a big way. I'm talking like 80 plus, okay? Or everything's going to retrace and alts are going to retrace even more. So let's say Bitcoin retraces to 60 from here. I think alts that are up a significant amount could retrace as much as 30 to 50% from current prices. So again, that's a judgment call. I think trimming is appropriate. I think taking some profits makes sense to me. The other part of this alt play is we've had a lot of rotation from layer 1s, layer 2s, absolute junk, memes, different ecosystems, LTC and Ripple. I mean, usually that's a sign that we're probably getting later in the rotation game, which tells me back to the original thesis, either we're going to explode on the Bitcoin USD price or we're going to see a pullback, right? I know that's like, oh great, he just told me to flip a coin, but both those scenarios are detrimental initially for alts based on Bitcoin relative value, okay? So that's just how I see it. Here's the dominance chart. This has continued to maintain 53, 54-ish. It has certainly reached a logical TA target based on the previous consolidation. It has yet to reach the ultimate top of the cloud here on the weekly. It is still above the weekly cloud. It is above a very high time frame diagonal that many altcoiners are sure that Bitcoin cannot keep going here, okay? They are sure that past halving dominance will continue to fall. Based on the ETF inflows, I'm not so sure that's the case. I'm surprised alts have kept up the way they have, I think in large part because of stablecoins. But this to me looks like we're coiling for a move decently higher. You know, if we can get to 60 plus, I would love it. It just makes the trade easier. It's not like, oh, I love to see alts wither because I do. It's more like we are consolidating for a breakout here. The breakout would make sense. And then we play the rotation game all over again, right? Or this breaks down on the USD pair and the Solana ecosystem alts go to zero, right? Like I would love that too. I'll take it. But I do think we are at a sensitive point in the altcoin dominant portfolio, for example, because my guess is, like me, you are up a considerable amount, okay? And maybe a good time to trim a little back to this idea, at the very least. Here's a similar pattern to that dominance chart. This is just ETCG, just because I saw it the other day. I don't know if you'd consider this a complex inverted head and shoulders or not. I don't know what exactly this is. If this is a diamond, something, I don't know. But that's my expectation. This does not look like a diamond top to me. It looks more like something that's about to break out. Maybe I just have my Bitcoin Maxi glasses on. I don't know. Alt BTC on the 3-day cloud looks okay. You know, I think that's as far as you can go. It is in the cloud, okay? It's neutral, it's flat. Alts do best post-halving historically, so it's a little bit surprising they're doing as well as they are. Like I said, I think many people who've been calling for alt weakness haven't necessarily been correct on a relative value because some of these alts have done really well, right? But until this is above the 3-day cloud, I don't think this is going anywhere. I think down or sideways makes more sense to me, broadly, right? Into Q4, even as late as probably into Q1 of 2025, I think that's when alts start to pick up again. So for some long-term alt play, you know, I think you're fine. It's just, you gotta have patience and conviction. But in the near term, if this does turn down, that would suggest a very bearish picture. And I'll get to an example on the ETH BTC chart. So what do you want to see as an altcoiner? You want to see continuous daily multi-billion-dollar stablecoin prints. Bianco is making this argument for stocks right now that there just isn't enough money to go around to lift up every single stock. That's why only a few have this concentration and attention. Altcoins, I feel, are similar generally and similar now, right? Altcoins need that liquidity for people to jump in. You'll notice funding is still very high, borrowing costs very high. That supply-demand imbalance gets pushed down a little bit if stablecoins are printed. So that's definitely what you want to see. Something else you want to see in the legacy side, more of an indicator of liquidity conditions, something like ARC, which is just loaded with bottom of the barrel type stuff. If this starts to break out towards Q4 this year, my guess is altcoins all over the place make some crazy moves, okay? Because that would mean liquidity is back in a big way. Rates are probably down. Before I talk about more crypto charts, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice: crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., DBA Kraken. And as you can see here, Kraken is chock full of alts lately. So if you haven't perused what's for sale over at Kraken recently, I would definitely give it a whirl because they've added a ton of coins over the past year. Looking across the board at different types of entries here for charts, it doesn't matter what it is. That's part of this argument for technicals. Many of these charts are in the cloud, have made their initial push. They look good. The edge-to-edge moves through the cloud are still pending. Waves is up like 35% today, something silly. Algo still looks good. Sushi. Some of these coins are going to start running into market cap issues, Filecoin being one of them, Sushi being one of them with fully diluted value, stuff like that. There's just been so much inflation on some of this stuff that realistically, they will have a very hard time getting to their $6,520 target on Filecoin, for example. So you also have to slightly pay attention to that. I don't think it's a rate limiting factor or anything here, but it's something to acknowledge. Now, something like Zcash, again, it doesn't matter what it is. I don't like the chain or anything in relation to Zcash, but this is also not in the cloud yet. So there are still some potential trades to take. Okay. This would be one I would wait on if I was purely agnostic, which I'm not. So I'm not going to touch this, but the argument for Zcash would be wait until price is in the cloud, which may happen in the next couple weeks. But most of the majors are through the cloud now. ETH, Solana, Bitcoin, obviously. So I think the next best risk reward trade would be something that's closer to looking like Zeke, where it's not quite there yet. As far as a theme, I think the AI, well, this is FET, we'll talk about it. I think the AI stuff, like I said in the open, is a little tired here. This was the mega inverted head and shoulders on FET, way above that target. There's nothing that says this can't keep going forever. Okay. I'm just saying, look, if we measure these targets, technicals tell you we are there on USD pairs, on BTC pairs. A sector that maybe is quote unquote next would be metaverse GameFi stuff. I think a lot of that stuff is kind of looking like it's just starting to move. If I'm trying to pick a narrative that's next, this might be it. This is just 4 that we're thinking about off the top of my head, but I'm sure there's more. These have very large clouds that price is starting to break into. You're seeing similar fractals on almost all of these charts, similar diagonal resistance breaches, bullish TK crosses, that sort of thing. So to me, it makes more sense to rotate out of something like ETH, potentially a little bit, rotate out of Sol a little bit, certainly out of Link, and into something like this. If I'm looking for maximal rotating power, that's what I would be doing. So let's talk about ETH. ETH has basically gone straight up, along with Bitcoin, to be fair, since mid-February. It is increasingly farther away from the TK support lines here. ETH at 3,100 would be a great level, but ETH at 4K, it looks a little bit overextended. And the weekly candles are incredibly strong. Okay. ETH just had its L2 upgrade, 4844, Denkun, successful. So that's good. But I'm just not a buyer on any chart that looks like this all the way up here. One of the way to look at this would be go down to something like the 4 hour and look at the cloud. For the most part, it's been a pretty smooth ride. The moment this starts to roll over into the 4 hour or a bearish TK cross, that is another additional warning sign. This to me is just intuition. I don't think there's anything other than being far from the mean reversion target that's giving me the heebie-jeebies up here. But the 4 hour rolling over would be something else to watch. It might not happen. I don't know. If we go to 80 on Bitcoin, ETH could go to 4,500 for all I know. ETH BTC on the 3-day cloud is curling down. It's looking cloud phobic, right? It's trying to do its best to drop out of that cloud. To me, this is an early warning sign that, along with ETH ETF approval sentiment, that this may start to turn lower. Lower meaning new low in the 04 region. Now, if you disagree with me, that's fine. Again, I'm not here to persuade anybody one way or the other, but if you're more optimistic on the ETF approval or how the market will trade up until the approval or denial, then I would argue you're reaching a point based on the consolidation range, based on the potential diamond bottom, that it would make sense to start rotating into ETH if you are optimistic on it. And each lower low here, you just say, you know what? If you have conviction, which I don't, okay, I'm not certain that the ETH ETF will get approved initially. Eventually, yes. Initially, I don't know. But I think now's a great time to start rotating in. You're getting closer to completing the triangle. And if you make lower lows, kind of so be it. I think your maximum stop loss probably around 0.51. And if the ETFs get denied, there's a measured move in the opposite direction to the S1 pivot at around 0.43, let's say. So it's a pretty wide range. I don't think there's a clean-cut trade here, but I know a lot of people are sort of counting on ETH BTC moving up. Here's an older version of a diamond bottom attempt that failed. This was in 2018 and 2019, also pre-halving, not as far out from, or farther out from halving as we are now, obviously, but this failure of a reversal did reach the measured move zone. Different times, I agree, but just something to consider as we get closer and closer to halving. We're like, what, 50 days away or less at this point. And I just think it's hard for me to be confident that that goes higher here. Solana looks good. It's above the cloud. The cup and handle that we talked about a couple weeks ago has played out. It's reached its high point target here. 200 would be the next level, but there's nothing screaming here that says, that's where we're going. I'm certainly not as confident in 200 as I was at 150, that we get to 150 from 118. Just because there's nothing here other than trend, which could easily take us there. Sol BTC in the cloud, Cloudflip bearish. This is leaning increasingly bearish from neutral. So this would have to flip back to bullish. Price above cloud, bullish cloud. That can totally happen. It's just at this point in time, not an expectation. ADA on the USD pair looks fine. It is moving its way through the cloud. On the BTC pair, it is back to sort of the range low. Another warning sign for alts just generally, when you get denied at the Kijun here on the bearish, this is a Kijun bounce, but a bearish Kijun bounce, okay? Just tells me alts need more time. Doge in the cloud, bearish Kijun bounce on the weekly Doge BTC pair. This looks okay. Doge tends to move in spurts on the weekly time frame. So if you go to like the monthly Bollinger Bands, Doge looks great. I just think it's a little early. I think the risk reward for holding is fine. It's just a little early probably to expect too much more because, again, you either need a rotation play or you need a liquidity play. And we haven't had either of those besides the first initial breakout yet, right? So just it needs some time. Downside risk is probably back to 10 cents, honestly. But it looks okay. It looks like it's consolidating. AVAX had a nice breakout, maybe playing a little catch up, trying to get back into the weekly cloud against BTC, but all in all, doesn't look super strong against BTC to me. Your target here would be 80, so it looks okay. I know AVAX has a lot of inflation as well, so that'd be another coin to check on a market cap basis, FTV basis, just to make sure it's not, some of these coins, like if they're bigger than IRL companies, there might be an issue eventually, right? If they're bigger than Saudi Aramco, then maybe that doesn't make sense, right? DOT has done well, making its way through the cloud on the USD pair. BTC pair, again, it's back to that range low. If you're long DOT, you better hope this is a W down here and not bearish continuation. It has reached its consolidation target. So it's a tough call what you do with these because, yes, there is a potential for, let's call it a 2.5x from here on the USD pair, but the BTC pair does not look super confident that it's going to hold this level. So it's hard to, some people don't care about this, the right side of this chart at all. Okay, I get it. I do. So that's why we look at it. But the USD pair looks fine. Link, at this point, it's kind of through the cloud. There's this rising wedge risk. It doesn't look terrible. I just think collectively everything just needs 3 to 6 months, right? And the BTC pair is falling out below the cloud. Does not give you confidence that Link BTC is bullish at all. Post-halving, Sure. We can talk about this post-halving, post-rates coming down, post-liquidity injections. I think in 3 to 6 months, between now and 3 to 6 months from now, you're going to have a great entry that's going to make a lot more sense than maybe holding at 20. You know, even back into 15, I could see that this whole thing playing out as a head and shoulders attempt, right? Potentially. Just depends how bearish everything wants to get. MATIC USD, again, it's trying to get through the cloud. It looks fine. It looks okay. Top side is 160. Against the BTC chart, does not look good. There's clearly a div here, a bull div. Maybe you could argue falling wedge, but I'm just not one to sit around and hope for the best. So this just isn't a chart for me. Ultimately, like everything else on the weekly, you want to get back above the cloud there. Uni, like DOGE, looks okay, right? BTC pair, key June bounce to the downside. So unless this stuff is crushing the cloud on the BTC chart, it's just hard for me to want to jump in after these moves on the USD pairs. Just doesn't make a lot of sense. For something like Uni, what you could argue in the next 3 to 6 months would be a right shoulder here. Shoulder, head, shoulder. And then it make its way through the cloud. It just needs time, right? Now, NIR is one that has had a great couple weeks here. Chart patterns are playing out. Reversal patterns are playing out. It's nearing, no pun intended, the other edge of the cloud at 11. Just now entering the BTC chart. This whole thing, you could say, is potentially an inverted head and shoulders, right? Left shoulder, head, right shoulder. So something like that looks like this is harder for me to want to trim, even though I know the USD pair is up significantly, just because it looks so good against BTC. So this would be the one keeper potentially, just because it looks as good as it does against the BTC chart. Now it's probably going to take 3 to 6 weeks to make a decision here at the cloud, and then, you know, maybe go through the cloud against BTC, but it still looks okay. Filecoin doing fine on the USD pair, right? You know, I don't know where this ends up eventually. 30, 60, 120, who knows? This to me is one that is worth just being super patient with. The BTC pair doesn't look bad enough to me, bearish enough, that you're losing out on a relative value side. I think you're hoping for an eventual diamond bottom here or some sort of reversal. Certainly not in the cloud yet, but all in all, it looks okay. It doesn't look amazing here against Bitcoin, but it looks okay. IMX, now anything that is up for, what is this, almost 6 months in a row, to me, the case to just let some of that go, trim some of that, is obvious. Against BTC, it's back in the cloud here. And it's not that I hate IMX or people holding it. It's just from a relative value perspective, it makes more sense to rotate in and out of this a little bit if it is weak against Bitcoin. So this could keep going easily on the USD pair. Doesn't look terrible. What you don't want to see is this M double top potential, but on the BTC side, it does not look happy. You know, it had this Adam and Eve, it had the bullish TK cross, crisscross, but here again, it doesn't look very bullish, right? Looks more neutral. Lido, ARB, OP, all this like ETH layer 2 or ETH beta, ETH layer 2, I guess you'd call it. It all looks okay-ish. You know, against the BTC pairs, these probably don't look great. The USD charts have reached their targets, their logical targets. It's certainly not something I'd want to buy up here. So I'm just kind of lukewarm, ho-hum about this stuff. If it's not significantly bullish against Bitcoin, it's just hard to want to buy that or hold that or think about it, to be honest. INJ, this thing has done incredible. And if you were lucky enough to be in this thing since 2, I would take that as a massive win. I certainly would trim some up here personally. It has reached its fib extensions from high to low. So the bear market fib extensions are reached. The equivalent for Bitcoin would be 100,000. Okay, that's just how crazy this move has been. Can this go to 250? Sure. But, you know, at some point, trimming some off makes a little sense to me. And against Bitcoin, it doesn't look as bullish as it once did. So all this whole video is just a judgment call, right? It depends where your entries are. It depends what your feelings are on AI or chips or metaverse or the rotation play or altcoins in general. Whether or not you are expecting significant BTC inflows, whether or not you're expecting an ETF approval for ETH. Here's another AI play, Render. It looks slightly overbought. Looks like it looks a little tired up here on the USD side, and on the BTC side, certainly to me looks like momentum is fading a little bit. So across the board, the risk reward plays that make the most sense are always going to be charts on the weekly that are entering the weekly cloud. Many of those have played out over the past 6 months, which have been great. Congratulations if you caught most of those. Those happen once a cycle, okay? So consider yourself #blessed. I think rotating makes a little more sense. I think, dare I say it, holding a little cash for a dip makes sense. Maybe going BTC heavy makes sense for some people. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.